Okay, unusual for us to have a late night or a later night session. I'll try to keep it quiet because one of my babies is sleeping downstairs and my wife has already told me that I'm in trouble anyway. But I had a revelation that I thought it was really, really worth getting everybody on here for a little late. I was going to do it anyway, but I figured if anybody wanted to join live, we could join live. But you know how we were talking today about when do you manage these things, right? If it's going against you, when do you manage it? And remember, I said we need to do a better job of going into this analyze tab and making sure that we look at our 111 and 112 trades, right? So by going in and just looking at them, is this a healthy trade, right? This is a very healthy trade. So you start going through them and say, oh, wow, that's a great trade. And we've talked a lot of times about how to read the analyze tab, how to know where we're long an option, how to know where we're short an option, where we're short options, and hopefully everybody's got that. But one thing that just didn't come up to me, we were sitting there going, well, maybe the perfect time to analyze the trade is when we breach the naked strike, right, which is right here. Direction goes up, it's broke this way, which means that's where the naked strike is. Or maybe we close the trade where the break even, when we go past the break even, right? And I was sitting there thinking, no, Bobby, you idiot. You are looking at the tree and you're not looking at the forest. Look at the forest. And how many times have I preached that to y'all? Look at the forest, not the trees. And I started thinking, Bobby, the forest has been screaming to you for several days to take some of these losing trades off before they get too big. Now, with that said, I made a grave error today in that I did, well, it's not an error today. I did close several of the trades and I closed them at losses. So this is after we got finished with our regular session. So I closed a couple of trades, right? You see, that was a $520 something loss. This one was a $21 loss. That was just the short puts remaining. So that was, these were all 11 days left to go. And this was a $305 loser. So we had about $800, $900 worth of losers, which only leaves me with one trade that is in the 11-day cycle. And I'm like, how could I have done better? Maybe I should have looked for it breaking the strike, it piercing the strike of the naked put. Maybe I should have looked for it piercing past the break-even point. No. Let's go to this. Here's where the dang thing was screaming for me to make an adjustment. Look. It said, hey, Bob, adjust. And the key was in all of these delta adjustments. So everybody sees, it's telling me, hey, fat, black, glass, nine-toed, Elton John loving son of a gun, you need to make adjustments. And how do we make adjustments? Remember, and I've preached this before, there's two ways to make adjustments. You put on a new trade, or you close an existing trade. Seems simple enough, right? Now, for those of us that sell short premium, what happens to our deltas when the market drops? Right? We're short options, market drops, so our deltas go up. It's an inverse relationship. So my spreadsheet was telling me, hey, Bobby, you've got too many long deltas. And it was screaming for me to not only put on a new trade with short deltas, right? Put a new trade with short deltas. But it was telling me, hey, fatso, close an existing trade with long deltas. Because why? The trade's going against you. The trade's going against you. It was there the whole time, y'all. Does everybody think, am I the only one that's like, oh my God, I've had a revelation? So in all these times of the last few days that we've been trading, rarely did I get to the point of no adjustment. And sometimes that was even through the sale of futures. Whereas this entire time it was saying, hey, Tubbs, you're too long. So what should I have done? Well, let's see some of these trades. All right, so let's see some of the ones that are in trouble. All right, let's find a troubled trade here. Some of these 70, well, I may not have, let's see, 18. Let me find a troubled trade. Maybe hard to find them now because I've taken most of them off in the other account, but let me see if that's not a troubled trade. That one's closed. That one is not a troubled trade. Hold on, we'll find one. Maybe I don't have any trouble trades in this one. I'm sure I do. Nope, that's not a trouble trade. Now, of all the times that I can't find a trouble trade, that's not a trouble trade. Maybe I'll have to go to the other account. Here, trouble trade. Okay, let's look at this. I think this will show us really clearly what's wrong with the trade. All right, so if I was doing this account, this is the IRA account, and if the IRA account were to tell me, hey, Bob, your deltas are too long, why would that be? It would be because the market has moved maybe from this 4098 area down to the 3903 area, right? So yes, my short stripe, the naked stripe of my put has been breached, and I'm close to being to breaching the break even. So currently this trade is down $140. Now I could be all heroic and say, yeah, Bobby, but if we stay here for another 11 or 12 days, I'm going to be up $125. See the teal line there that says I'm going to be up $125. Okay, I could act all hero on that, or I could close the trade. Why? Because I know that this trade has positive delta, 2.83. So let's go and find this trade. 2.83 delta. This is 111/5. Let's go find him. Under monitor tab, what was it? 112/5, right? No. What was it? 111/5. 111/5. All right, 111/5. Where are you, little fella? Look at this. 28 positive deltas. 28 positive deltas. And instead of me trying to be a hero and trying to manage the individual trade, the Greeks were screaming to us the whole time, y'all. We didn't see it. We were oblivious to it. We didn't hear our spreadsheet screaming to us, hey, Tubbs, don't be a hero here. Take off the small $145 loser so that you don't experience the big $500 or $600 loser. Was there the whole time. And I preach the whole time. And this is why it's good for us all to get together, is because I say the whole time, look at the forest, not the individual trees. But we've been saying, how should we manage the individual trees? Is it at breaching that naked strike of the put? No. Is it at breaching the break even? No. It is when your deltas get out of alignment. How do you adjust your deltas? You adjust them by putting on a new trade that would be negative deltas and taking off a positive delta trade. It is screaming in front of me. If my spreadsheet says, hey, Tubbs, you are too positive delta, then don't be afraid to take off one that is a small loser. Now, y'all, the majority of the time, we're not going to have this problem. The majority of the time, by us making our trades as we do them, it's going to say no adjustment. But on those days, those seldom days where the market may be going against us in a big way, it will scream. You see this? Look, not just on one day, but it will scream to you, hey, there is a problem. And I didn't notice the entire time. I didn't notice. So what I did is we made it look like we had a humongous big week. But what I did then is went in and adjusted my deltas today. And let's see what the final Greeks look like. The final Greeks look like this. I brought my deltas down to 33 by closing some losing trades. Now, it took my theta down, but my theta is well in line of being between 0.1% and 1% of my net leg. My closing those losing trades, remember this account was at 60-something% of my buying power. It again was screaming to me, hey, Tubby, trades are going against you. Don't let them go too far against you. So what I should have said is, yeah, I'm a little bit too long. I should be having a buying power of no more than 40% based on today's fixed levels. And it was telling me you needed a delta adjustment. It's screaming to me to do something, and I didn't do it. So what I did today is I bit the bullet. I bit the bullet. So let's show you the updated profit calendar. It doesn't look good at all, right? So what I did is we had a profitable week, but after I was thinking about it, and it was like, when do I close these things? The revelation come to me, get your deltas in line, Tubby. So what I did is I closed a couple of those that were down to 11 days that I should have closed for such smaller losers earlier in the week. If I had just listened, we would have still had a positive week. Does everybody, I hope you're following along. The Greeks, the forest was screaming, we need help, not the individual trade. We're looking at the trade, y'all. You're looking at the trade. We're looking at when do we close the stinking individual trade, and it does not matter. What matters is if we're too far away from being centered. If we're too far away from being centered, that's where we have the real risk. And it was screaming to me, Bobby, you're too long. You're too long. And the great thing about this is this will also work in reverse. If we're too short, it'll tell you, hey, babe, you need positive deltas. So here's what I want you to really feast on this weekend. I want you to really feast on the management of the 111s. And I want you to think about it from a portfolio, overall forest perspective, not from an individual trade perspective. The portfolio, the forest was screaming for attention, and we failed to give it the attention that it deserved. And it meant that by closing those three trades, those three losers today, rather than one here, and one here, we would have experienced still a positive week. We would have been much better off than waiting for the thing to get totally out of line. And the Greeks were there the whole time. Anyone got any questions about this? I think this is a huge revelation. Now, we may wake up Monday and go, Bobby didn't know what he's talking about. But right now, it was important enough to me to come in after the market to share this with y'all. How do we back test this? I don't think we can. I don't think that we can put this into option omega and spit this out, but I think now, rather than allowing one trade to get too far beyond us or working against us, now we can say, hey, if our deltas are too off center, we need to make an adjustment. So how do you first make the adjustment? The first adjustment comes from putting a trade on the other side. Normally when you do this, so if it's screaming to me, let me show you this. If it's screaming to me, hey, Bob, you need negative deltas. And if I do a bearish 112 trade where I buy a put spread and sell two naked calls, that's a negative delta trade. How much buying power does that cost me? Zero. If you're able to put on one of these trades and it costs you zero buying power, that pretty much tells you, hey, pal, you needed it in your portfolio. It's almost like the brokerage company is screaming to you, their risk management team say, hey, pal, and how many times have y'all seen me do it? I'll put on, if it says I need negative delta and I put on a bearish 112, it takes zero buying power. Why? It's almost as if Thinkorswim and their risk management team is screaming to me, hey, Tubby, you needed this. That's why we're going to not charge you any additional buying power. It's kind of like when you sell a put on a stock, right? You're selling a naked put, and then you go, hey, I might as well sell a call against it as well because it takes no additional buying power. Same thing with these 111s and 112s. So if I'm able to have them on the put side, then I can put one on the call side to adjust my deltas. They're even encouraging it by not charging me additional buying power. So the whole time, this thing was screaming for us to take attention, and I didn't take attention to it. And because of that, I'm suffering the consequences of a $753 losing day. But check this out, 291 up, 385 down, 360 down, we're still up. But we would have been much better if we had looked at the forest first instead of trying to figure out how to manage the tree. Y'all have a great weekend. I will see y'all Monday.